Welcome to the Daily Market Recap. Today is Tuesday, July 28, 2026. What a wild ride across Wall Street today. While the major benchmark averages managed to squeeze out gains, it was anything but a quiet walk in the park. The headline story: big tech and semiconductors took a noticeable punch to the gut, but instead of dragging the whole house down, money rotated straight into value. Cyclicals and dividend plays. Investors are essentially taking profit from last month's monster AI high flyers and spreading the love across the rest of the market. Strong quarterly earnings results from traditional sector heavyweights gave traders plenty of reasons to buy the dip everywhere else. So while your favorite chip stocks might be feeling a bit blue, the broader rally is actually showing some surprisingly healthy breadth. Taking a look across the heat map, it was a classic rotation party. Industrials, financials, and energy led the charge into green territory today as lower crude prices gave consumer sentiment a nice little tailwind. Utilities and real estate also caught a solid bid as bond yields eased off their recent highs. On the flip side, information technology and communication services were the clear underperformers of the session. Chips took the brunt of the damage, falling overseas volatility and profit-taking ahead of massive mega-cap earnings reports due out later this week. It is a classic case of out with the overcrowded mega-tech trades and in with literally everything else. And over on the sentiment gauge, the CNN Fear and Greed Index sits comfortably at a cool 40 today. That puts market sentiment right in the fear zone. Traders are playing it cautious, keeping their eyes peeled for big earnings drops and macroeconomic catalysts ahead. Our top story of the day: the massive earthquake shaking up the global semiconductor landscape. Chip makers worldwide took a heavy tumble today, triggered by aggressive sell-offs across Asian markets after South Korea's Kospi cratered overnight. Investors are growing increasingly jittery over lower-cost AI competition out of Asia and mounting concerns that huge AI infrastructure buildouts might take longer to turn into pure profit. Giants like Micron, AMD, and Applied Materials all saw sharp drawdowns as traders scrambled to rebalance their exposure ahead of massive earnings reports from big tech titans like Microsoft, Meta, and Amazon later this week. It is a high-stakes game of wait and see for the AI trade. Coming in at story number 2, trade policy is taking center stage once again. Washington officially rolled out updated global tariffs targeting broad import categories under Section 301, while essential commodities like oil, gas, and fertilizers remain exempt. Wall Street spent the day dissecting how these trade tweaks will impact corporate profit margins and supply chains heading into the second half of the year. The good news? Analysts generally view these adjustments as relatively contained compared to previous tariff cycles, which helped calm broader macro jitters and allowed cyclical stocks to catch a breath. Rounding out our top 3 stories, crude oil prices continued to slide back down to earth today. After spiking toward multi-month highs last week on Middle East supply disruption fears, Brent crude dropped back down into the lower 80s hours. Easing energy prices provided a huge sigh of relief for transportation stocks, airlines, and consumer-facing businesses, while simultaneously cooling down inflation expectations. That pullback in crude also helped push U.S. Treasury yields lower, giving equity valuations some much-needed breathing room. All right, let's zoom in on the biggest individual stock movers of the session. Here are today's standouts and stumblers. Leading the charge on our top gainers list today, we have Itron, Kiniksa Pharmaceuticals, Lucid Group, and JetBlue Airways. Itron surged, following a massive earnings and revenue beat that blew Wall Street's expectations out of the water. Kiniksa gained big momentum on positive clinical updates and strong demand for its specialty treatments. Lucid got a jolt of energy as EV speculation returned, and production milestones got traders hyped up again. And JetBlue took off after reporting solid revenue growth, alongside a promising long-term profitability blueprint that gave airline bulls plenty to cheer about. On the flip side, taking a heavy beat down today, our top losers are Amkor Technology, Commvault Systems, Sanmina, and Sterling Infrastructure. Amkor dropped despite reporting record revenue as cautious forward guidance and elevated capital expenditure plans spooked short-term investors. Commvault and Sanmina both faced heavy selling pressure as the broader tech slump and conservative full-year outlooks triggered quick profit-taking. Meanwhile, Sterling Infrastructure pulled back sharply as traders took chips off the table following its massive year-to-date run-up. Moving over to the charts, let's break down key technical levels, starting with our benchmark S&P 500 ETF, ticker SPY. SPY managed to hold its ground remarkably well today, hovering right around the 54 pivot zone. On the downside, immediate support rests firm at 535, with a secondary major floor sitting at 528. If the bulls want to ignite another leg higher toward new record highs, they need to push and close decisively above key resistance at 545, followed by the psychological ceiling at 5550. As long as SPY stays above 535, the overall uptrend structure remains completely intact. Next up, the tech-heavy NASDAQ 100 ETF, ticker QQQ. QQQ has been taking the brunt of this semiconductor pullback, testing trader patience around key moving averages. Immediate support is sitting right at the 475 level, a breakdown below that could open the door for a quick retest of 468. On the upside, bulls need to reclaim resistance at 485 to stem the bleeding, with a tough overhead ceiling waiting at 492. Watch the 475 level closely tomorrow. If it holds, we could see a powerful relief bounce. And finally, small caps are showing serious life. Ticker IWM, representing the Russell 2000, continues to benefit big time from this market rotation. IWM is comfortably riding above key support at 215 with a strong secondary floor down at 210. Looking overhead, immediate resistance sits right at 222, followed by a major breakout trigger at 226. If small caps can punch through 2222 on strong volume, this broader market rotation could turn into a full-blown small cap rally. Shifting gears over to the crypto universe, Bitcoin is locked in a tight consolidation phase as digital asset traders digest broader financial market movements. BTC is currently grinding around key structural levels, maintaining strong primary support at the $64,000 zone, with a critical macro floor down at $62,000 to spark the next explosive parabolic breakout. Bitcoin bulls need to convincingly slice through overhead resistance at $67,500 and clear the major milestone target at $70,000. Volume is coiled like a spring, so expect a bigger move soon. Turning to Ethereum, ETH is showing steady price action following recent spot ETF inflows and network activity momentum. Primary support for Ether sits comfortably at $3,300 with a deeper safety net waiting down at $3,150. On the bullish side, buyers face immediate overhead resistance at $30,550. If ETH can clear $3,550 with strong buying volume, the next target on the map is $3,800. Keep a close eye on the ETH BHBTC ratio as altcoin sentiment hinges on Ethereum's relative strength. Across the wider altcoin landscape, performance remains selectively mixed. High beta layer 1 networks and AI-focused tokens are experiencing choppiness alongside traditional tech stocks, while Solana ecosystem projects and select DeFi protocols are catching rotational bids. Total crypto market cap is holding firmly above key support levels, indicating that long-term capital isn't fleeing the space, but rather hunting for high-conviction narrative plays. Wrapping things up, overall market sentiment is cautiously optimistic as market breadth expands beyond tech, even with the fear-greed index lingering at 40. Looking ahead to tomorrow, all eyes are on the Federal Reserve's interest rate decision, followed by crucial earnings reports from big tech giants Meta and Microsoft after the bell. Buckle up, because volatility will definitely be in the driver's seat. If you enjoyed today's recap, do us a huge favor, hit that like button, subscribe to the channel, and drop your top stock pick in the comments below. Thanks for watching, and we'll see you right back here tomorrow.